Hey traders, TG Watkins here, and it is May 5th that I'm recording this. You guys should be seeing it on the 6th. And wow, so much for a one day wonder, huh? That was a really, really massive short squeeze that we got the other day, which was a beautiful, beautiful, beautiful setup. It was everything that I was calling for the week, and we were looking for that bounce. We sure got it in spades. And then today, Thursday, when we started the morning, it just everything got pushed down really, really hard. So zero follow through on that short squeeze. There was no more short squeeze, and I think that really put a different feel for the market. So let's dive in here, talk about that, and see what we can do going forward. I've changed my gears a little bit. Really, that short squeeze is everything I wanted, and that's all we got. So as soon as we got that thing, that was it. Change gears, and now we go back onto the major direction, which I think is to the downside. So let's kind of take a look at things. We're going to be looking at let's look at the SPY first. And just a screenshot that I took. It was easier for me to just kind of pull this up here using Thinkorswim. This is a historical look. This is from 2008. This is mid-January 2008, so about January 15th or so. And what you can see is there's a level right here, and then we came down, hit the lower third ATR, which is very similar to what we did over the last couple days, which is why I was looking for a bounce. And this bounce didn't go very far, but the bounce we did just experience did get up to the 21 EMA. And then what you can see is back here in 2008, there was a big move down right there, closed on the lows, kind of a little bit of a double bottom near term. And then you could see we got a little bit of a movement here. So that's why we have non-far pain rolls on Friday. So by the time you guys see this, you will have already known whatever those results are. So if we get a little bit of whipsaw on Friday, I wouldn't be too surprised about that. But you can see basically it still was up here and it hit the underside of the moving average and then continued to move down. And then we had a really, really big move down here that got us well outside of that third ATR, huge sell off. And this took us from the top to here was a 20% correction back, and it equaled into mid-January 2008. So I say all that because I look at what's going on here and it looks very, very similar as to what's going on then. So if we kind of zoom in here, we look at these things, you can see that here was that short squeeze that we got yesterday, zero follow through, absolutely nothing. It got pushed down all day long. The internals were super, super strong. I mean, we haven't seen internals this negative for quite some time. Even on these last pullbacks, we have not moved downs. We have not seen them this strong. So then you can see we have a bit of a double bottom here, a little bit of a double bottom there, which is what I was showing you from 2008, in addition to the overall double bottom right there. So that all worked out like that. And you can see the third ATR, and we're getting that bounce. So at this point, what I'm concerned about is maybe we get a little bit of jostling, but it seems like we're going to keep going down from here. Just there is no strength out there. We know a lot of things are pretty bad. The volume is look at the up volume, the big volume on a down day like this, and yeah, everything is looking pretty bad out there. And if we get this move down in the market to say 380, that would be a 20% correction from the low to the high. And what I showed you in that 2008 thing, what we've seen before, is that when the market wants to go, it can go fairly quickly, and it only takes a few days to do it. So 380 is not too far from here, and it could do that in a fairly big way. So, or in fairly quickly. So do keep an eye on that and see if there's going to be something happening in that direction. So part of that is then what brings me to the UVXY. That's something I've been talking about quite a bit. And as I said, we got the trade I was looking for. I was looking for price to pull back, and it did exactly that, right into there. And then it just reversed the other direction. I thought that maybe there would be another day or something like that, maybe a little bit of a hangover from that short squeeze to where there'd be a little bit more short squeeze, or the UVXY would sink down a little bit, and it did none of that. It reversed and then just shot right back up. So we got out of that position, then we went long on the UVXY, and I'm leaving the door open for something kind of in through here. Price has not tested. A moving average here hasn't tested the 15-minute 50 yet. So I wouldn't be surprised if we kind of got something like that over the next day or two. You can see the Moxie indicator still kind of working on that. But the thing to note is on the hourly chart, This was a trampoline move, and it's now been confirmed because we now have a green day right there. So we came all the way down here and then all the way back while the Moxie indicator was above zero. So price below the 50, but the Moxie indicator above zero is a trampoline move. And now that it's back over the 15-minute 50 and back over with the Moxie indicator now positive, that is pretty much confirmed. And then if we look here, now just kind of remember this because I'm gonna then show you another chart of something that happened. So you can see here we hit the daily 21, or sorry, the daily 200 once, and we pulled back. Now we're hitting it here. We've kind of hit it a second time and then a third time because we closed basically at the daily 200. So notice that we hit it once, and now we're just spending time at the daily 200 for the UVXY as this thing sure looks like it wants to kind of percolate in this area before making a move higher. So keep that in mind because then if we go up to UNG, and actually I got to get over here on the weekly chart. So UNG on the weekly chart. And what I want to show you is here that you can see basically the same thing. Now, I know they're totally different sectors. This is really just more of a chart structure type thing. But you'll see how on a weekly time frame, this is what UNG did, is it hit the weekly 200, and then it came in here and started hitting the weekly 200 again. This looks an awful lot like that UVXY on the daily chart, especially right here where price is starting to percolate underneath the 200. So this happened on a weekly time frame, fine. But if it happens on a daily time frame, you could expect the same situation just on that scale, just on the daily time frame scale. So I'm looking at this thinking, all right, if it starts breaking past the 200, we're probably going to get a big move to the upside on the UVXY, which means the market is probably going to go down. And that's why I'm kind of saying that S&P to 380 seems reasonable. All right. Also, just UNG, natural gas. Man, this thing keeps going. We've got a small piece that's still left over. We've been in BOIL, which is the leveraged ETF of that, and it is up huge. So we've been having a good time with that one. And then, just showing you guys the NASDAQ, the same kind of thing. I mean, look at this. The weekly chart ended on the low. You maybe call it a doji, but it's kind of at the low end of it. So any kind of, and this is still a weekly chart, so we're only Thursday, and it's still got some time to decide what it wants to do. But man, ending on the lows, not very good in through here. So that's NASDAQ, and then the IWM also basically the same thing. You can see it's just ending there on its lows and doing all that kind of stuff. And yeah, we got that one little bounce. Yeah, big short covering rally right there. But apparently the bigger players were not going to get out of their shorts or anything like that. So they're like, nope, we're just going to stick here, and that's what they did. So up and down, round trip like that, and on that day. So that's the IWM, and then a lot of this is getting talked about because of the dollar. The UUP is a ticker that I like to look at. Now, we were looking yesterday thinking that going into the FOMC, the dollar was moving down. We were seeing some volume, some selling. And from a technical standpoint, that makes sense because it's up here, it's outside of the 30 ATR, it's up here outside of the 30 ATR, and it's just very extended. Now, I don't trade the dollar, I don't look at it too much, but this is part of the reason why the markets are going down, in addition to the interest rates going up through the roof. And what we can see here is another day where the dollar is still up super, super high. So there we have that. And then if we look at the TLT, this is how we can see what the bonds are doing. So TNX is how we can see what the interest rates are doing. These are the bonds, so inversely related. TNX, the bonds, the interest rates are super high up there, and the bonds are just careening on down. So this is another thing that is really affecting the market is the bonds and interest rates and all that kind of stuff going on again with the 50 basis point raise that we had from the Fed meeting yesterday. All right, so then we kind of take a look at, say, some individual names. If we look at Apple, let me come over here and look at the 15-minute time frame as well. And if we are here looking at, say, the daily chart, it is pretty much sitting right there on its daily 200. It seems to me like a very precarious spot. Here it was sitting at the 200, and now it is there, but look at what it's doing. It's really kind of spending some time out there. Doesn't seem like it wants to be very strong. It doesn't look like it's going to go up like this. So I would expect that this is probably chewing away the strength of the 200 in order for it to go back down. This turned out to be an inverse trampoline move on the hourly chart. So remember, price over the 50, but the Moxie indicator below zero is an inverse trampoline move. And This is now looking kind of like a triple bottom, and I think the rumor is that the old saying is that there is no such thing as a triple bottom. So take that for what you want. And as I said, this was a very, very strong down day across the board. And so I look at this and maybe there could be a little bit of a bounce because there's a kind of a gap here between price and the 15-minute 50, and there's kind of a gap here. But a bounce or sideways action seems like it's just going to go into resistance and continue rolling over. So that's Apple. Be careful with that. And if you come over here on the weekly chart, the other thing we can see is, well, it has been holding the weekly 50, but how long is that going to happen? To me, it seems like it's a very precarious situation to be holding the weekly 50 at this point. And we can now look at the Moxie indicator. We now just got a fresh sell signal for the weekly chart on Apple. So Apple's looking very precarious. Amazon had an even worse day today. Ever since it had earnings, I was targeting the weekly 200 and the monthly 50, which it definitely hit. It spent a couple days there. You can see right there, spent about 3 days, and then it continued going down today. No bounce on Apple, zero bounce. I mean, just a little bit of sideways, and then you can see it just kept going down. So Amazon is another big major stock for the indexes, and it's been not doing well and going down in a significant way. There's just not much else to say about this other than just be prepared. Things can always go down further and faster than you think. So just because maybe it's at that third ATR or just because it's at that 200, maybe you're thinking, okay, there's going to be some bounce. No, you better look at the lower time frames and make sure it's actually going to hold and start turning around. Because Amazon on the hourly chart was never anywhere near along. Zero things. And you can see here ran right into the underside of a downtrending hourly 50 and another inverse trampoline move right there. So price should not be over the 50 if the Moxie indicator is below 0, and that is it's an inverse trampoline move. All right, then we look at Google. Kind of same thing. It was trying to bounce a little bit. It was part of that short covering rally, and I was thinking that maybe we get a little bit more of a move up here. Maybe short covering rally, and if more shorts are going to be nervous, then here you go. It should be up like that, and instead today just down and then down even more. So this looks like it's probably just going to hang out sideways until it wants to go lower. But I don't see anything that says it's ready to go up. Mostly because that day just got annihilated with that short covering rally. And even Google does not look oversold. It has come in from its daily third ATR, so being oversold down there, and now it's over here. So it's got room to start going down again. And on the weekly time frame, it hasn't even touched the weekly third ATR. So Google still has plenty of room to go down if it wants to go down. How about Microsoft? Here's another way that we can view this. Kind of throw that one in through there like that. And what I'm seeing here is in through here on the weekly, and then we got the daily and hourly. So we got that short covering rally right there, right? Well, if this was going to have a little bit more upside, I would have expected it to hold here, basically holding above the hourly 50. And it did not. It went very, very hard straight down through all of that stuff and pretty much ended on the lows. And so that doesn't look good. Ignore the Moxie indicator. It's not mattering right now because even though it's positive, it's basically just a representation of this going sideways in this box flag type thing. And on the daily chart, you can see price keep getting rejected by the underside of the daily 50 with the 8 below the 21. And really, it just seems as though it's been enough time and it's probably going to keep going lower like that. And same thing here. Very, very little support. Doesn't have any like the weekly 50, nothing like that. And you can see all these wicks. Look, these weekly wicks are down on the lows. So really pretty tough situation like that. Yeah, tough market out there. Hopefully you guys are on the right side of it. And then if we can look at Tesla also, Tesla's been holding up pretty well. I'm not interested in trying to trade Tesla short, mostly because it is the strongest. That's not to say there aren't opportunities. So if you guys want to do this, great, but just understand you're trying to short one of the strongest stocks. Of course it can go down, and of course it can go down fairly hard and pretty far. Just understand what you're dealing with. Maybe it's easier to short something that's already on its way down. That being said, just like Apple, because Apple's pretty strong too. That being said, Apple and Tesla do look like they're getting kind of precarious at that weekly 50. Do we think that price is going to be able to get supported and held up at that weekly 50 if everything else starts to move down? I doubt. And if they start losing their weekly 50s, the market's going to move down, the S&P is going to move down, all that kind of stuff. So I would not be surprised to see Tesla lose the weekly 50. Where might it go? Well, you kind of look at maybe some previous support area, and you got, this area right here, and you have the 30 ATR. Seems like a reasonable place for Tesla to fall to if it wants to go that direction. So keep that in mind. There could be a big move down there. Now, that being said, if we talk about all this, we might in the next few days get a pretty big move down in Tesla and Apple. Amazon's already doing it. We've already seen some of the big other names already fall down a lot. If the indexes fall down a lot, I'm kind of targeting S&P weekly, or sorry, S&P 380, because that would be 20% from the top. And as I said, I showed you that thing with the SPX, SPY, basically going back to the 2008 situation and just kind of finding a proxy for, okay, what are we going to do here? Now, keep in mind that if price does move down, if the S&P does move down to about 380-ish, not exact, but if it moves down there and we get about a 20% total correction, I'd bring in all my shorts, because keep in mind that might, we've kind of, traders have been conditioned to buy or to look long at a 20% correction. So, it could be 20%, could be 23%, whatever, just kind of in that ballpark. When it starts reaching that area, I'd look to get out of the shorts, and I'd actually look for some sort of bounce. Now, it may not be the cleanest bounce. It might bounce and then just go sideways for a little bit. We could get into a whole lot of mess at that point. But I am looking for basically a bounce in that situation once it hits a 20% decline. So do keep that in mind. So there's Tesla, and then USO, in addition to UNG, is looking pretty good. But unfortunately, I'm not really seeing much in the way of stocks, oil-related stocks that I want to deal with. Even though this market might start moving down, and it could move down in a big way, I think that's going to stifle some of what's going on with the oil stocks. So yeah, this does look good. Oil looks good. Oil looks like it wants to go higher. But if we look at something like, say, Halliburton, it looks to me like it's needing to take a little bit more of a break. So yes, it was very overbought. Yes, it's coming into some support. That's good. And here, well, we're below the daily 50, and the Moxie indicator is below 0. So I don't see an opportunity here. And right now, it looks to me like it's kind of doing a bear flag up into the underside of the daily 200. And I don't think it's going to hold, or sorry, the hourly 200, and I don't think it's going to hold the hourly 50. The Moxie indicator is still below 0. So these things could roll over a little bit more. CVX, these things, yes, they've had some pretty good up days recently, but same thing. I'm just cautious about them. They are not quite doing the things that I want them to do. Like this is an awkward position, awkward pattern for me. Yes, it's over the 50, but it's probably going to get run over by the 200, and I'd like to see price come back down again. So the Moxie indicator is still below 0. It has not confirmed that the hourly 50 is support yet, because it hasn't tested it yet. So I don't really have much to do with this one either. Now, I wouldn't necessarily short these. Oil is strong. Oil names are still pretty high, and I wouldn't short them. Maybe what we should be looking for is maybe they'll kind of just go sideways. Maybe they'll dip a little bit, but if they go mostly sideways while the market really plunges, then these should be good relative strength names that we could be looking at once the market hits a 20% correction, something like that. So those are some ideas. It's something to keep in mind. Look for relative strength. Look for stocks that don't go down in a huge way, or go down into support or a double bottom or something like that when the market reaches a 20% correction. So keep that in mind. Let's see if we can find something like that. And then we can find the leaders to go long in when the dust settles, hopefully whenever this market pulls back. So there you go, guys. If you enjoy the way that I talk about the market and all that kind of stuff, come over here to profitpilot.com. Check out services. That's where you guys can get into the trading room and the indicator and any other classes and stuff that I put out there. And again, thanks for your time. I'll see you guys later.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.